Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at financial results once again, and today we're focusing on one of the largest financial conglomerates in the region, NCB Financial Group, and its majority-owned associate or investment, Guardian Holdings Limited, or the Guardian Group. And we take a look at the performance, both of which were quite impressive and signaled significant improvement. Let's take a look at how both companies or groups would have fared and what investors might expect in the months ahead. Turning firstly to Guardian Holdings Limited, and the group did, for its 9-month period ended September 2022, report a very significant increase in earnings per share of $4.55 compared to that $1.97 in the prior comparable period, so a 130% increase. Driving this performance was a significant improvement in its net result from its insurance activities or core activities, which did increase from $630 million to $1.3 billion odd in terms of contributions to earnings or revenues rather, or net income rather, and that was a 111% increase. Net income from all activities did increase 26.2% from $1.9 odd billion to $2.4 billion. Overall profits attributable to equity holders increased from that 457 odd million to just over 1.05 billion TT dollars. Now, when we take a look at net income by activity for the Guardian Group or Guardian Holdings Limited rather, we see that net income from investing activities was down actually about 18% from 1.15 billion to 942 million, which is to be expected in the current extremely volatile financial market environment that all entities are confronting at this point in time in that green. So net income from investment activities did fall. However, that was more than offset by a 79% improvement in net income from insurance activities, which increased from 630 million to 1.3 billion, as mentioned. Very modest increase in its other business segment. Net income from brokerage activities up just around 3% from 109 to 112 million. Now, from an investor perspective, when we take a look at the trailing earnings per share of GHL, well, it looks like good news with that trailing earnings per share figure increasing from the 9-month level of $3.22 to $5.95 in the 9-month period of 2022. That has not been met as yet by any increases in the share price of Guardian Holdings Limited. However, and that price earnings ratio has fallen from 10.2 times in the prior comparable period to 4.4 times. So it does appear to look like Guardian Holdings Limited is trading at a much cheaper valuation. However, investors may have one eye on the dividend payouts of Guardian Holdings, the Guardian Group rather, as well as the continued financial market volatility. And on that basis, at a price of $26.01, GHL is trading at that price earnings ratio of 4.4 times, which is fairly in line with the sector average of 4.2 times. And now take this sector average with a pinch of salt, given that there have been significant fluctuations in earnings and prices of sector constituents over the past couple of months, and does offer a trailing dividend yield of 2.8%, which is a little bit below that sector average of 4.2%. Now, with improving profitability on one hand, but continued financial market volatility on the other, and on the basis of relatively fair valuations, Bourse is going to maintain a market bid rating on GHL for the time being. Now, for NCBFG, for its fiscal year ended September 2022, the group did report an earnings per share figure of 53 cents, which is a 90% improvement from the 28 cents reported in the prior comparable period. Net results from banking and investment activities were up 9.3% from 4.3 billion to 4.7 billion. Overall net operating income was up 23% from 5.3 to 6.6 billion, again driven by that insurance segment, and net profit attributable to equity holders improved 92% from 628 million TT equivalent to 1.2 billion. Now, when we take a look at the operating segments of NCBFG, again, pretty good reading across the board, with the exception of that gain on FX and investment activities in orange. In terms of net results from insurance activities, the 84% odd increase from 1.01 to 1.8 billion. Its major segment net interest income increased 20% from 2.14 to 2.6 billion. And again, that the one dent or negative was that gain on FX and investment activities, which actually fell about 27% from 1.05 billion to just about 729 million TT equivalent. Again, similar story for NCBFG. there has been a return on a trailing basis to pre-COVID levels, 53 cents per share on a trailing basis, which takes it back to its fiscal 2019 level of around 54 cents TT equivalent per share. However, prices have fallen for NCB. It has actually been one of the worst performers on the stock exchange or on the TTSE for this year, and that has driven its price to earnings ratio down, given the recovery in earnings, but the subsequent fall in share price. So that price to earnings ratio at this point in time means that the stock is trading at a relatively cheap level, based on earnings quality, of course, at the price of $4.70, 9.1 times earnings. However, one of the major factors for NCBFG has been the absence of a dividend, and that has taken its dividend yield down to 0% compared to the sector average of 3.2%. So with, again, improving profitability in mind, keeping an eye on that financial market volatility, and perhaps for some investors, looking at the absence of dividends in the near term and cognizant of fair valuations, Bourse is going to maintain a market weight rating on NCBFG for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 2BORSE or 226-8773. Email us at invest@boursefinancial.com, or check out our website where all of our research is absolutely free at bourseinvestment.com. Have yourselves a great investing week, and we'll see you next time on the Bourse Report.